Greetings, Algo artisans. Cowboy here. We're going to take a look at Solana, Ethereum, and Notcoin. We're going to stick with the charts today because the market is just in that mode. So let's jump into the charts right now. Okay, so here we are looking at Solana, and just the quick story on Bitcoin. Bitcoin is in its post-halving consolidation and pullback. A lot of people were thinking, including myself, the price might break out as of a week or two ago. And it did not. So I had a super high risk, very high reward Solana trade that was on last week, and that did not work out, and that's okay. It was a very small risk, but it would have been an amazing trade. So for the moment, it appears that price is heading back down to some supports. Now, if we take a look at the price action, we can see that there was a fair amount of back and forth, a fair amount of consolidation from roughly top side about 160 and down to the bottom roughly 125. And price has re-entered that range. There's just a little bit of this price action back here in early March, and then again for several days, probably the better part of a month, from mid-April until mid-May, so almost exactly a month. And then price did try to rally out of that and got pushed right back down. So what's going to happen next? Well, it's going to depend on Bitcoin, and Bitcoin does seem to be holding above 60,000, and that's the big number right there. As long as Bitcoin holds above 60,000, the market will remain relatively confident that the breakout is going to happen in the near future, right? Next few weeks, next month or two, that's where I'm at with it. And this is all based on prior performance of the halving. So as long as Bitcoin continues to not break out, there are a couple of scenarios that can happen. If Bitcoin stays above 60 and does not break out and volatility falls, and Bitcoin stays where it is for maybe several weeks, there's actually a decent chance that the altcoins can run. So I'm going to overlay Bitcoin so we can kind of take a look at the behavior of Bitcoin and the altcoins in relation to that. And we do have a very, very close correlation. And what we have is oftentimes where Bitcoin itself during its consolidation can remain a little bit low while some of these other coins start to pull ahead just a little bit, but more or less you're seeing these coins basically be leveraged versions of Bitcoin. So what has happened in the past though, and I mean the distant past, is that if Bitcoin consolidates for an extended period of time, week after week after week, and the volatility really drops off of cliff and the market becomes comfortable at that level, then the altcoins actually can move. But for the moment, we're not seeing that kind of lack of volatility from Bitcoin right now. It is on the way there. In the meantime, it's not quite there. So let's just take a brief look at the algos. Already flat on the daily. You have a combination of bearishness and bullishness, which basically means price is going to range. It means indicators are not quite as valuable as they could be. High time frame, everything is bullish, but it's in the middle of pulling back. So if I were to go all the way up to the monthly chart, there are some indications here that yes, everything's bullish, but it's in the middle of a quite strong pullback in the middle of that bullishness. That can flip at any time. Even though it is a strong pullback, price can recover very quickly, so the indicators and such things are not quite as useful on the higher time frame either. In fact, price action is going to be much more reliable in general. However, the indicators using multi-time frame analysis do tell quite a bit of story in the high time frame. But at this time, we're more relying on price action. And one thing I see that I'm not a big fan of when it comes to the bullish side of things would be that we are seeing some lowered highs. Now, if price bounces up, creates a lower high, and comes back to that low, which I'm about to demonstrate right now. So we have this high base basically at 125. Now you have a lower high at 188 instead of that 204, 210 level, and it comes back down to again 125. Let's say it rallies up, but it only makes it to 172 instead of this prior high at 185, and then comes back down to 125 yet again. This means that there is a decent chance price is going to actually fall through. Now this would be a bit of a bearish scenario in the middle of a bull market, and while I would say that it is not probable, the problem with saying that is that we don't have a lot of data on halvings. We've only seen 4 of them, and we've only seen 3 of them through to their completion. We're in the middle of number 4. So to try to base a strong thesis on 3 halvings is a little bit weak when it comes to data science. So there is the possibility that price actually consolidates with lower highs, creating what is called a bullish descending triangle. In this case would be a reversal pattern, which I've seen a lot in crypto over the years. Not to say that it's going to happen, not to say that they always break in the same direction, but the probabilities are such that this would break downwards if it were to happen. This is a month out, several weeks out, and in the meantime there is a decent chance the bull market will resume before any of this happens, but technically this pattern is already there. And so the chance of price breaking down, even in a near term, is possible. And where would it go to? Well, we can use this data to create a Fibonacci extension target. And the way we do that with one of these triangles is that we use a Fibonacci tool. Now, these triangles do sometimes have a little bit of subjectivity to it. Where do I put the bottom? Do I put the bottom at the bottom of this wick? What about that wick? Why not this wick instead of that wick? The reality is we have two wicks touching in this area, plus we have this consolidation prior to it, where price did create a bit of a floor. So I'm comfortable with using this triangle to measure in this manner. This bottom pink line being right where it is okay by me. That being the case, I would go ahead and go from the highest point to the base with my Fibonacci extension tool, and my targets for a downside move would actually make a lot of sense according to market structure as well. Be looking at 103.28, 74.44. Now, price has bounced off of 100 pretty strong. If you look right here, you can see these wicks off of 100 push price all the way back up into a multi-week rally. So there is a decent chance that 100 will be defended, and it may very well be defended by a lot of people. Let's not forget that Solana is used quite a lot in the meme coin space, which is as alive and kicking as ever. And Solana is seemingly the largest narrative of this bull run right now. So our choices are a breakdown to these levels or possibly a breakout. And this can happen in crypto, despite the fact that this is a bearish pattern. This can happen in any market, but especially crypto, where price may simply just rally and head up. It could do that. It could bounce a little while longer and then head up. One of these scenarios here, really anything can happen, and we know that. So let's just take the bullish case because we have the bearish case with targets around 100 and about 75 roughly. And if I were to treat this most recent rally as an extension, and I'm going to draw that right now with this trend line, if I were to treat this most recent move up as one extension and use my Fibonacci tool, then I would get some upside targets, and those would be 250, just below that, and about 290. Those are near term, and 250 is just below all-time high, which I believe is 260. Here it is. Then the 290 would be a new all-time high. Again, this is contingent on price breaking above. Now, what we're seeing so far is this triangle. However, a simple print above this line right here would invalidate that triangle. It'd be very easy for that to happen. So don't get too bullish or bearish or anything like that. Do like I do, take it level by level, look at the data, make choices from there. At the moment, I am not going to be trading on this much. I'm not going to be trading on this high of a time frame. I will be looking for trades on the lower time frame. And I share those trades with Algo Factory, private group, and it is not a signal service. They are not to be following my trades, but they do use those trades as research on their own trades. Okay, let's go ahead and move on to Notcoin. Okay, so we're taking a look at Not on the daily. Obviously, Not is a pretty new coin, and like so many cryptos right now, it is bleeding out. It is holding pretty decently above some of its pre-run structure. So price moved up from about a half a penny up to 1.3 cents right here. And when it did so, it pulled back and it created just a small amount of structure. So this top is a place where price might bounce. It might go to grab liquidity in this area and perhaps bounce upwards, perhaps not. So we can actually draw a line right there as such. We also have some recent structure here where price fell down to 1.47 cents back in early June and then rallied back up after that. Well, that is also a bottom, and price appears to be jumped right off of that bottom as we speak. As a matter of fact, in this 18-hour candle, there are 16 and a half hours left. So if this current candle closes with a higher high than the prior candle, these are the highs, and a higher close than the prior candle, those are the closes, higher high, higher close, then we would be looking at a possible rally up. The question would be, how high would the rally go? Well, if we're merely going to trade the retracement, then the way I would do this would be to use the most recent move down, the most recent impulse, which would be from here at 2.18 pennies all the way down to 1.45 cents. And that extension is the price movement on which I would place my Fibonacci retracement tool. And I would take a look at the 618 for Fibonacci confluence right here. And then what would I do is I would use my fixed range tool to take a look at the volume nodes. And I would see that price is going to be attracted to just above the 618. So a decent target would be about 2 cents. I might front run that. I might sell before that, or I might even be conservative and take targets here at 17.9, which is basically 18 cents. Why would I do that? Well, if we take a look at the volume nodes, and the screen is getting a little bit messy here, but these areas where the bars dip in on the volume, where there was not a lot of volume, that's where price might reject. It might bounce back down, right? So if price were to head up, one of the areas it might not make it past is this first empty area in the volume nodes. Price could easily reject right there. However, I would go ahead And if my algo said that I could, I would buy that. I would go long, and I would be willing to risk that price would make it past this. However, the 618 is right in the middle of one of these. So I would probably choose a target that is before the 618 that does have substantial volume nodes, and I would probably take profit and not risk the price was going to have to make it past a second empty volume node. And that would have a target sitting at 18 cents, pretty much on the dot. So I probably would go 17.9 cents. So if that's the case, what would my trade look like? Clean that up a little bit. And again, I would not enter this until the candle was done and or until the algos said that I could. But let's pretend the candle closed right now. Then I would enter right here at the next open. My stop loss would be calculated however I do my stops. I have different methodologies. If you're over at Algo Factory, you know how that works. And then I would have targets right at 18 cents or just a hair below. Would this trade make sense as it is written on the screen? Technically it would. The stop loss being rather generous, rather deep. This is a 1.16 risk to reward ratio, where if I were to risk $1,000, I would pull out 16% more, aka $1,160. So this is within my tolerance. This is a high time frame trade. So if price were to go along these lines, what I also would do would be to probably buy some of the pullbacks on the way up and take some smaller trades to build a position. So I would create a position with a pretty decent low risk stop loss scenario. And then as price moved up, I would try to grab some tighter stop moves and make some better risk to reward, probably with smaller amounts of money. And again, I have everything calculated to where I'm having proper money management practice. And if you want to know what money management is, come to algofactory.tech. That's what I do to make sure I do not blow up my account. And blowing up your account is bad. I know everybody using the term blow up like it's good and trading it is bad, but you can see here this second pullback trade, provided the algo said that I could do it, gives me a 2.71 risk to reward ratio. I could risk $1,000 to make $2,700. Okay, so that is the Solana play for me. If it plays out, if you're interested in this trade, I'm going to keep an eye on that. Let's move to Ethereum, and looking very much like Solana. However, Ethereum does have that strong move going back to mid-May, late May, where the ETF data announcement came out. So as it stands, we are taking a look a little bit more at some prior consolidations, liquidity levels where price bounced back and forth several times before. And we do have an area where price did bounce a lot back and forth right here. And price does seem to be more or less back in that area. It's a little bit messy. Sometimes these ranges are kind of conflicting. In fact, I would have this range look like that. So in this case, they're actually not like doing properly drawn. So price is in this higher range, and it does appear to be trading in a little bit tighter of a range than the prior range, but we know that there is liquidity here for it to grab, so it may very well stay where it is for now, and we might be seeing a range build like this. So for the moment, as the volatility falls off, I'm not that interested in trying to make big moves, right? Big trades on large market moves. I'd be looking for smaller moves. So if this range were to, well, it pretty much is valid. You have 1, 2, 3, 4 bounces here. 1, 2, 3, 4. So we do have a range. So if I were to range trade, and sometimes I do, especially nowadays, I might actually just short the top right here. As soon as price gets to that, I might double check my algos, I might not, and I might enter a short. This is on the daily, right? There's a lot of room to make this work. Have my stop wherever I decide to have my stop. Again, I have the same rules that I use for that. And we're looking at as much as a 3-to-1. Could be even bigger if you have a tighter stop. Depends on how you're trading. And again, this being on the daily chart, on the way down, price is going to probably see some pullbacks, of which I can take advantage by adding some tighter stop loss trades on the way and building a position on the way down. This is where it's at. I know a lot of people in the market right now are just a little bit stressed. They thought Bitcoin was going to break out. I thought the same thing. I knew that it might not. I didn't have a belief that it was going to break out. I had a pretty decent probability that it would, and it did not. And that's okay. I was prepared for that. Vast majority of my crypto is buy and hold. That being the case, I have a few plays like this that can go ahead and open up my book to a little bit more profit in the meantime. I hope this video was helpful. Please come over to algofactory.tech. We teach people how to build their own trading method, otherwise known as an algorithm. You don't have to know how to code, but if you do code, we can put you on the path to where you can build something that trades for you while you're not at the computer. If you just want to trade manually, which is what most people are doing, then that is, of course, something that we can help you do and help you have the capability to possibly extract money out of these markets on a regular basis. And while we do focus on crypto for a lot of these videos, I'm actually primarily a Forex trader, and you got to know that crypto doesn't go forever. it goes for about a year, year and a half, and then for a couple of years, there's not much going on in crypto. And if you want to be a trader, you're going to want to understand how to really trade, how to put on those big boy pants, because what's going to happen is eventually crypto's going to flatten out and the meme coins aren't going to be what they used to be, most likely. I've seen it enough times. I've been in this game since 2017. I don't expect that to change. So come on over, learn how to trade. As a matter of fact, we got some pretty happy customers who are already down the path of success in their algo building. Let's hear from one of those right now.
Hey guys, so I've been in Algo Factory for around 10 months now. I held crypto, but I hadn't traded crypto or Forex before. Since joining, I've learned a massive amount that I use almost daily for trading, reading charts, using indicators, and understanding different aspects of the market. So I found the course incredibly easy to follow, and the interactive style of teaching is incredibly beneficial. So now that I'm comfortable in my trading ability, I'm starting to invest more capital, and projections are looking very promising. My goal is to be trading full-time in the future, which I believe is highly achievable. I've met an amazing community of like-minded people and made some great friends. In my opinion, both V and Cowboy go above and beyond, and I highly recommend joining Algo Factory. Thanks for everything, legends. Cheers.
Don't forget, algofactory.tech, trade your job, upgrade your life. We'll see you on the next one.